in the mid 2010s. I invested in Bitcoin for the first time. Next bull market, which may happen, and I'm saying it could happen as late as Q1 25. Some will be hit in 23 is my guess. I'll actually give you a related answer, which might be something that your viewers or listeners have not really heard of. Because I could talk about, hey, finance is going to get decentralized, and education and trade finance and real world asset, and all of them have elements of truth and compelling logic in them, but I'll change that a little.
Talking about the journey of our guest, he's buying stocks from the age of 12. He's been into angel investing for more than 2 decades. He's a former CEO of Zebpay, one of the largest cryptocurrency exchanges in India at that point of time. And now he is the CEO. What's it called, Ajeet?
Reflexical. And for your viewers, listeners, whatever, since you said investing in stocks since 12, I must tell you that while it is actually a fact, it was 12 and a half to be precise, more or less precise. It isn't as if I had my money. Okay, so it wasn't as if I had my money, it was my dad's money. I invested in an IPO. So what happens with people who have some degree of success, they manufacture these backstories about themselves. Right? Especially in politics, but now business is also politics. So when I hear such introductions about me, I am like, those who don't know me at all are listening to this and saying, hey, this is all one of those propaganda pieces and stuff. I can tell you which stock it was. I can tell you what I bought it for. I can tell you how much I bought. I can tell you what I sold it for and stuff. But that is not the objective of this. So now your question is, how do you do it? Actually, it's not easy. It's not difficult. All you have to do is 2 things. One is control your insecurity. Because every time you stop building on something that you were doing and try something new, it causes you insecurity because you worry that you're going to lose on the momentum that you have built up, the value that you have built up, because you go back to zero. So first is if you can overcome that insecurity. And second is primarily if you have read Calvin and Hobbes comics. There was a very famous comic strip where he finds some broken toy or something and he finds it very delightful, and then he says, there's treasure everywhere. That's kind of one of the slogans of my life. I have lots of slogans in my life. In fact, there was a full Calvin and Hobbes comic collection called There's Treasure Everywhere. Literally all around you, there is opportunity, there is excitement, there is something new to learn, there are great people to talk to. You don't have to find them. They are there. Just don't resist them. Just don't try to not gain from them. That's it.
So, if the problem that our generation has is that they have a lot of access, it's a good thing and a bad thing. As you say, you should keep an open mind and just not worry about things and just go ahead with whatever there is. But how do you differentiate between what you are sticking to and not giving up and just being resilient and switching things? How do you know when to pivot?
How do you know between fickle and flexible? Fickle is a bad word, flexible is a good word. Both of them amount to the same thing. But before that, you used a term called our generation. Let me just comment a little on that. So my parents' generation, the fraudsters of that generation would keep telling their children, oh, when we were small, we had to walk 5 kilometers to reach a school, and we didn't have lights in the house, so we studied in street lights and all. So every generation has had dramatically superior opportunities and access, as you say, compared to the previous one. Right?
Completely agree.
So to that extent, it is not new. The fact that everything is new in itself is not new, because it's always new. Now, answering your question about fickle versus flexible. Okay, I'm going to extend the question if you don't mind.
Sure.
Random versus innovative. Randomness can seem innovative. Right now, suppose for example, I lie down on the floor and I say, now I'll do the rest of the podcast lying down. Right? Somebody say, oh, what a creative guy, what an innovative guy. Wow, what a great thing to do. Somebody else could say, how stupid is this? So to some extent, it is in the eyes of the beholder, but there is a little more than that. Begin with random versus creative, or random versus innovative. Anything out of the ordinary is both random as well as creative, and hence innovative. If in being out of the ordinary, you are also creating some value, I'll not get into judgment on for whom, how much, etc. But if you're creating some value, I think that gets into the area of innovative. If you are different for the sake of being different, right, then you are just being random. It may seem cool to somebody, but that's okay. I have no objection against it. Likewise, fickle versus flexible. it is true that most of this is discovered in hindsight. Like very simply, you might have heard of a lot of these scams coming up. Like recently, there was a Sam Bankman-Fried FTX scam where he used the customer's money, tried to deploy it into investments. Now I worry that if those investments had become successful, if the Bitcoin price had not shot to 69,000 but at like 150,000, and everything had gone up, and he had made a great return on that and funneled some of it back to the investors, he would be called a visionary.
Yep, a hero.
That means the action was not the thing; it was the outcome. The problem is the Bhagavad Gita thing. Effort, not fruit. You can't control outcome. You can only control your action. So in your action, it is not very easy to distinguish between fickle and flexible, right? Between stubborn and firm. Stubborn is a negative word, firm is a positive word. But they both have the identical characteristics, and what it was will be discovered in hindsight, and hindsight is 2020. But I think this is where your upbringing, your learning, your intuition, your counsel, people who mentor you, advise you, right? Your wisdom, your emotional quotient, and all of them come into the picture. It is not as if all of them are enough and that you'll automatically make the right decision, but that is what you build upon. And that is what will eventually distinguish between somebody who tends to succeed more often and somebody else who does not.
All of the things that you just listed there, I completely agree. But let's say if I want to have the right values, the right intentions and all of that, I believe those, as they say, we are the sum of 5 people we are around with, and it comes around being the right people. So how does one get themselves around the right people? Like, how does one make it happen?
If people are the average of the 5 people around them, right now you are around me. Tell me, are you raising my average or lowering my average? I'm just kidding. You don't have to answer.
That was a tough one to answer.
Yeah, I know. What are you going to
But
say?
I can answer that I am raising my average. So
what about me? Am I raising my average? Well,
it's defined upon how you take value. Like if you learn the next generation of things.
Absolutely right. I was telling you about kids between the age of 13 and 18 where they start developing individuality, identity and stuff, and there'll be a set of them. You'll meet them in high school and then in college and stuff, who are very foul-mouthed, who in every sentence will use some swear word to the extent that they really can't control it sometimes. And some of them will go to the other extreme and they are always very worried that they'll say it in front of their parents or in more decent company. I have not been one of those. In fact, if anybody is listening, watching this, tell me if I have ever used a swear word against you or you've heard me even say it elsewhere. If there's a comment around whatever platform you're watching it at, please leave that because I want to know. But it used to make me wonder, why do they do that? Right? It could be that they want to look cool or whatever, but those are oversimplified. The fact is that every one of us, and this is a human trait, just like we have survival instincts, we'll always try to survive at the very least, we have a very strong desire to achieve. If we are unable to achieve, we try to do other things that make us get that same high.
Fill that void in.
Yeah, for example, some people will get into drugs because it gives them that high which achievement also gives.
Yes.
Right? Some other people use foul language because it creates an impact and everybody wants to make an impact. Right? So we all know what we want. In reality, we truly know what we want. For example, there was a time when I would, people who were, let's say, wanting to do an MBA would come to me and ask, hey, should I do marketing or finance? Which is better? Right? So now you can give 2 answers. Either you can be stupid enough to answer that and take marketing, it is good, or something like that. Or you can get into the what do you really want thing. And he's like, listen, if I knew that, would I be wasting my time talking to you? Though that is the correct answer. Now the fact is that if you want to know who I want, why, what value I get, who are the people around me, I think that one of 2 things has to happen. In most cases, I would put that at 70-80% of the cases, intuitively you know what is right. You may be forcing yourself to do the wrong because somehow maybe you're trying to fit in. Maybe you're trying to aspire for something which you know is not right for you, but intuitively you know what is right. Like, I call it the rule of the triple so. This is a rule that I made myself.
Interesting.
So if somebody says something, right, that, hey, I was thinking that I should do this, and then I say, so. Now they have to go one level higher and they're so blah 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 blah. By the time I ask the third so, the entire conversation has disintegrated because they realize they have not thought it through. right? So that is the rule of the triple so.
Okay.
Your thought process has to survive a triple so, right? Which means it should sync with what you stand for, what you believe in. I don't want to make this all touchy-feely, warm, cuddly, fuzzy. I'll just tell you this. In my opinion, most people know what they should do. They choose not to do it for some reason. So focus on what are those reasons that cause you to not do what is the right thing to do, and eliminate those reasons. So I think this covers 70-80% of the people. Now there are others who may have been misled. There are others who may be weak in some way. There are others who may have a certain background which has caused them to believe something. Like for example, take our political beliefs. People have diametrically opposite views with the same set of data.
Exactly.
So it's not that the information is different. With the same information, you take opposite views. You go to America, there is the pro-life and pro-choice about abortion, right? The information is the same, and people take completely opposite views based on their, let's say, call it values and belief systems. So that is it. If your values and belief systems lead to certain direction, you are going to benefit or lose from that. Think about it. Look at the last few years. Has your sort of thinking, not actions, been good for you? Build upon it. If your sort of thinking only has created negativity in your life, it causes you to get frustrated, it causes you to lose and then blame others, then there's something wrong with you, right? So overcome it. If that is not too abstract an answer, and I'm happy to get more specific, but if that's not too abstract an answer, that is the only thing to do.
People asking you about joining MBA or finance at IIT. So what was the driving motivation behind becoming the CEO of that IIT program?
So you must know that every such question that you're asking has a real answer, which even the person who is asked the question does not necessarily know, because there was a huge emotional question to that. And then there is the answer which I think of now when I look back, because that was 2014. We are recording this in 2022.
23.
Yeah, 23, yeah. A few days ago it became 23. So like 8 odd years later. Now when I look back, I have sterilized the emotion from that. I have made it an intellectual thing. Also, I am being interviewed kind of with you, though it's a conversation, but are you asking me questions? So I want to sound good. So I'm going to give a insightful answer, right? But the reality is that when I was in that position, it was largely an instinctive and an emotional thing. Here's the thing. Growing up, we were not wealthy. By far, we were poor. Now, how poor? We were not like lower class, but we were like lower middle class. These distinctions are not very easy, but let's put it that way. So there were very few luxuries. Like if I had a new shirt or pant that I would buy, it would be on my birthday, just to give you an example, right? And unlike my other two brothers, who everybody wants to be rich, but I more badly wanted to be it. In fact, my parents and other people who knew me well say, "You're too money-minded." And I was like, hey, I don't have money. It's like not possible. But at the same time, I used to ask my parents, because they inevitably are your closest counselor, though you don't necessarily value them too much at that age. I used to tell them, I want to be rich. What do I do? So they would tell me, there is only one solution to change your economic status, and that is to study. My dad would distill it down to get more marks. As in not like education, wisdom. Hey, get more marks, get good admissions. That is how you break your orbit. He was clear. He said, that's it. And I must tell you that now that I have children who are older than I was at that age, right? I must tell you that it is actually a very good answer. Amongst the most deterministic methods of changing your economic status is education. However, if you were to ask me, is that number one? No, that's number two. Number one, unfortunately, is not that deterministic. In fact, you will wonder how your question about why did you get into IIT is related to what I have started talking, and actually comes to the same thing. I have found, this is my belief, that the number one determinant of success is the people you are surrounded with. Their mentality, attitude, whether they are the winner kind, the loser kind, they are the kind who pull you up or throw you down, whether they create negative energy or vibrancy and all of those kind of things, I think is the single biggest. Then education is a second, probably even a distant second, but education is number one because you can choose to do it. Because you don't have to get a doctorate. You can, very least, let's say, become good at English speaking. That gives you a social standing. That you go and develop some skills. Then you go and, so all of, you can keep climbing up this infinite ladder of education. But the number one is the people you surround yourself with. So I have actually always been absolutely thirsty, hungry for associating with good people. And good is defined not just in intelligent people, though I am drawn to intellect, even if sometimes those people can be beep, beep, as in I'm just self-censoring what I want to say, because I just told you I don't use foul language, right? But it is more than that. And there are people with who you feel like talking. There are people with who you feel like opening up. There are people who create a positivity in what you're doing, right? So all of this, and I felt that being part of IIT Bombay, though the pay was measly, but being part of IIT Bombay, I thought would give me that sort of kick. And while nothing is 100%, I came across people whose company was not that great also, but on the whole, fabulous. Like for example, our board, SIGN, which is Society for Innovation and Entrepreneurship, had a board. I can't fault the board. As in, half of them were from industry, half of them were from IIT Bombay, professors and stuff. They were great. As in, I found that it inspirational to be in the same room as them. I can't say that, like I said, it's never 100%, right?
Yep.
But on the whole, that was the driver of the decision, and it turned out to be a very good decision.
Speaking of going back to your childhood, as you said, you were not certainly wealthy. So how did that journey of starting so early in the stock market start, and how did it change from going to stock to angel investing, then into crypto, then NFTs?
When I was in my early teens, my father and I used to get into a world war every time we would have a conversation.
I can
relate. And this world war was like argumentation, and often I now realize that I would argue against anything he would say. As in, had he said the opposite, I would argue against that also, because I just wanted to argue all the time, and he would hate that behas kar raha hai, which means why are you arguing with me? So one of those days he asked me, why do you have to be like this? Why can't you do what other people do? Why do you always have to do something which is the opposite of what people do? And of course, my World War instincts rise, and I say, hang on, Dad, tell me, in your opinion, are most people in the world happy, or are most of them complaining? So he said that most of them are complaining. So I said, if I do what everybody else does, then I'll become like the most, right?
Yep.
So I should do the opposite. I have a greater likelihood of succeeding. And then he found that also argumentative, which it was, because when I said it, it was to win an argument, but it stuck with me. And I realized one very interesting thing. You shouldn't be different for the sake of being different, but you cannot really be mundane, run of the mill like everybody else, and hope for exceptional outcomes. So way back, I had decided that I have to find something different to do. Now, there are many things. I wrote 8 books. I set up multiple businesses. I started my first business very young and blah, blah. I don't want to give all of those things, because if you start doing that, it sounds like, oh, somebody is successful, a minor success. Now he's looking back and saying, I was a celebrity since birth. But to answer your question, in money terms, I realized that really there are only 2 ways to make money. This is, by the way, me in my 12 odd years of age.
Okay.
One is, you got to be lucky. Oh, by the way, when I say money, I don't mean like some money. I mean extraordinary amount of money.
Big bag.
So I could take a job like everybody else did, like my father had done, and make money.
Yeah.
That's not what I'm talking about. I'm talking about like serious bags of money. One is you can get lucky. So buy a lottery. So I would always, encourage my dad, let's go and buy that lottery. It would be the state lottery. We would buy it for 1 rupee, and 100,000 rupees were at stake. Never won it. But one was that. And the second was to take whatever little money you have and deploy it in a way that it generates an outstanding return. Now, the most common form of investment, which actually should be labeled as savings, were in opening fixed deposits, or what some of your viewers might recognize as certificates of deposits in a bank, which would give like somewhere between 8, 9, 10% rate of interest at that period. Would go up to 12 also in certain cases. Now, not good. Because if you put 100 at the end of the year, you're like 110. I want 1,000. So I did not know any place where money can multiply fast. And the only thing I found out was the stock market. For those who are wondering how could you, like at 12 and a half, how could you do it? Actually, it's not that fabulous. Because like I said, in hindsight, by communicating and messaging a certain way, you can make ordinary things look great. But the fact is that my father had very poor eyesight. So even to read the newspaper, which people would read, children, there used to be this thing called a newspaper, right? Yeah, so then you'd read that every morning. And so I would be the one reading it out to him. My older brother would not come and, in their control. My younger one would behave as if he's too young. So I was the one who would always do that. Now, when I do that, I could gerrymander the thing, which means I can choose which news to read.
I see.
You know what I'm saying?
Yep.
So over time, first I would just start reading and stuff. Then I said, you know what? I can influence this thought process. I can decide what to
filter
read. Right? So I would inevitably want to read more of money news than of politics news. Right? And then I discovered while reading all of that, there was something called shares. Even the word stock
Yep.
came much later in my vocabulary. Then I would tell him about that, and then I would read some editorials which would typically come on Sunday about that and stuff. And in telling him this, I started getting really excited, and I used to tell my dad, why don't we also buy some? Right? And my dad was like, no, it's a gamble. It's like a bad habit. Some people are like, addicted to this and stuff. But everybody wants money, right?
Yeah.
And there were these things called public issues, which today we recognize as IPOs.
Yep.
And you had to put you had to buy a minimum of 50 shares. This was called a market lot because we would have physical paper shares. These were not depository shares. So you would have to get market lots. First it used to be 50, then it became 100, and there were some exceptions to that.
Yep.
And usually these stocks are priced at 10 rupees. So the typical minimum amount you would invest would be 500 rupees. That is 10 multiplied by 50. And you would have to wait for months for this process to complete and the shares to come to you, and maybe you are able to sell. We are just for the reference of people who are listening. This was in October of 1982. I remember the month. And finally, my dad mustered the enthusiasm to try it out. And at that point of time, there was only one public issue going on. So I did not even bother to choose. Like when you say, Ajeet invested in the stock market at 12, it seemed like I probably did some research and read. No, there was only one stock available at that point. I said, let's buy it. As in, it was really that desperate.
Yep.
I bought it for 10 rupees. And when it listed, which was in about 3 odd months, eventually listing is happening in 3 odd days. But at that point in time, it was around 3 odd months. It listed at 13. 1-3. And my dad couldn't believe our good luck. Because if we had kept money in the bank, that was going to take a solid 3 years. This happened in 3 months. So my dad also was hooked. So I would actually read the prospectus. Please note, a prospectus is a 30 to 100 page document that comes up with all shares, which talks about everything about the issuance. I would read that out to my dad over a period of 5-7 days. Like let's call it like 50 pages. All the terms that were there, even ordinary terms like balance sheet, were alien to me. Note, I was not even a teenager, right? But I would read them out, assuming my dad is understanding. I'm not sure he was, but he was surely understanding more than I was, right? And in reading this out to him, I got deeper and deeper into it. I had some pocket money that I would accrue. And at the age of 16, with my own money, I had collected these 500 rupees, it was probably a little more than that. And I invested my own money for the first time. These were convertible, non-convertible debentures issued by Reliance. I think it was called Reliance Petroleum or Petrochemicals. Not the company that eventually came, because this company was dissolved or merged with Reliance Industries. So with father's money, 12 and a half, with my own money, roughly 16 years of age, I've been investing. But your question about, why this, then why startup and blah, blah, blah. We'll talk about that journey separately.
How
but,
as well.
Yeah, but the answer is this. By doing what everybody else is doing, I would have to, let's say in the stock market, I would invest in the index fund, which is what Warren Buffett would tell you to do, though he doesn't do it himself. Which means in the Indian context, I would earn like a annual return of about 14%, which was only in most periods about 4 or 5% higher than what the bank would give me in fixed deposit, but much more risky. So I wouldn't do that. I want a lot of return. I want to identify opportunities which I'm smart enough to identify, right? And I'm willing to put money on the fact that I'm smart. Of course, I've lost a lot of money in investment, okay? I'm using the word smart and air quotes. But that is the only way to grow. So my children, who now are 18, 19 and 22, both of who hold multiple stocks and cryptos. But I got them into this at a very young age because I wanted them to develop a perspective, right, about what to do. I told them invest in currency. I told them invest in crypto. I told them invest in forex, which is currency, commodity, student loans, blah blah blah. All of those things, housing, blah blah blah. Of small amounts. These are very very small amounts. Sometimes as low as $10. But get into that so you understand, right? So for example, recently my most recent stock purchase was Tesla.
Okay.
Which I bought between 100 and 120 at various price points. And yesterday when it hit 144, by the way, something you didn't know because we were talking about it yesterday, my son, who had opposed it and said that, yeah, Tesla is good, Elon Musk is God, but isn't the price too high? And I said, even if it is, you got to get in now, right? Otherwise, you'll never be able to capture you can never do bottom fishing. So basically, that was my motivation, that you cannot do ordinary things and expect extraordinary returns. So you got to find some extraordinary things. In doing so, you may be making a big loss. In doing so, you might be doing a mistake, but at least you have a chance of success.
Right now, there are a lot of fudge rumors, but I could only imagine the type of environment, because there would be like limited sources of news or information, and what if those were wrong, or like what if those were biased at that point of time?
So let me give you an example of something you didn't label and nor did I, which is buying real estate. So for the longest time, I was not a big fan of buying, let's say, an office or an apartment and stuff, because I thought that on the whole it was, given the huge illiquidity and difficulty in selling this and huge transaction costs with brokerage, stamp duty and what have you, I stayed away from it. But there was one other reason, which will answer your question. I used to think that there's some guy who comes and buys a plot of land, right? Then develops it, probably builds a building on top of it, then takes fractions of that called apartments, offices, whatever, and sells it to me and makes a huge profit. Why can't I buy that land? Because if you see, starting from that land to the selling price of the finished product, which is an apartment or an office, the margins are huge. We are talking of like 300% to 1,000%.
Wow.
Right? Of course, there are risks that the person takes, but I'm talking of just the sort of returns, as in the raw land versus the finished price. Of course, there are expenditures in between, but those can be financed. And I was like, I buy at that stage when it's 3x or 100x of the land cost, and then hope for an appreciation beyond that. Cheating. I didn't have any money to buy land. Fractional land was not available. Where it was available, it was too fanciful, and they had built in too much margin, and it was not reasonable. At one point, it struck me that, you know what, even companies are likewise. If I wait for companies to issue stock in the public, they started like a long time ago with probably like a negligible, modest beginning. And from there, they must have grown many times, probably like 1000x, which means like 100,000% kind of thing. And then I buy the stock and then look forward to it going up, which it does. What if I could get in there, which in, cliched terms would be called getting in on the ground floor, right? A term which is usually used by multi-level marketers and stuff, and hence misused. So I don't want to get people misled with that. But I said, what if that could happen? And when the dot-com boom of the very late 90s was at its peak, a couple of my friends set up an edtech company called Padai.com. Padai stands for studies.
Wow.
Okay. This was in Jan of 98. And they valued it at a certain value, which I still think was a good one. And they asked me for some money, and I was their only investor, so to say. And I really thought I was going to make tons of money with that, because my logic was, now I have entered at a stage, few years could even be 10 years before such companies go public, right? When I did that, crazily enough, all those people who were stock market investors found me stupid. Because they're like, now you've got shares in a private company. What are you going to do with it? Tomorrow these guys will not go public. What will you do with it? Or they will basically make profits and take it all home in salaries or other forms of distribution. What are you going to do with it? Right? So the company may do well, you may still not do well. Right? So they kind of look down upon it and think it's stupid. And especially those startups which were very fast growing and rapidly evolving, they were often not even profit making. So they're like, this is bogus compared to, all those stocks that are listed, these banks, these fast moving consumer goods, this infra projects, cement projects, whatever. You should buy that. And I would tell them, listen guys, it was not even a decade back when others would say such things to you and say invest in the Unit Trust of India, which was the only mutual fund available in India, or invest in bank deposits, because it's gambling to be investing in stock. So that was the thought process. In the mid 2010s, I invested in Bitcoin for the first time, and then the startup guys used to tell me that I am a fool. So first, all those traditional guys who invested in banks told me that I was a gambler to invest in stock. Then all the stock guys told me that I was a fool to invest in startups. Then all the startup guys told me that it is bogus to invest in Bitcoin. And guess what? Few years later, these crypto guys are telling me that it is nonsense to invest in NFTs.
You can just say it. That's what they were saying.
Yeah, so just by the way, in all honesty, there is only one NFT that I have ever purchased. I'm not an NFT buyer. I appreciate NFTs. I don't think I've developed an intuitive degen mentality to kind of guess what is good, what is not good, where it is hype, fad versus real community and those kind of things.
Now, coming back to market cycles, changing markets, and people saying, like, you're stupid for getting in, getting out. What do you think about the current state of the crypto market? About bull run, what do you see for the year 2023, 2024 for the current crypto market? Like, what's your analysis? It doesn't have to be a price prediction, but how do you see it fundamentally? And because you have seen a lot of markets that are not crypto, and you have also seen previous bear markets and bull runs.
Yeah. So there is a term misfit, which used to mean like an outcast, but somehow in the startup world, the word misfit has become a good word.
Yeah.
Right?
Yep.
I have always been a misfit in my life. I don't think I was an outcast. And the reason I'm a misfit is because while on the one hand, I'm a complete believer of this entire blockchain, crypto, token, Bitcoin movement, paradigm, at the same time, I don't condone 90 to 99% of the nonsense that happens here.
Yep.
It's a fact. So when somebody who is strongly opposed to crypto comes and lists that this is wrong with it, this is wrong with it, this is wrong with it, the fact is I agree with most of it. People who are opposed to it, I actually agree with most of it, because it is true that our recording may or may not be going on right now. So somebody is playing with that iPhone, which I thought was recording, and I was like, as they say, making love to the camera. The camera was off. The camera was not making love back to me.
Don't worry, we got
multiple cameras. Yeah. So unless we have like multiple failure, it's going to be. But again, let me just come back to what I was saying. There are just too many things wrong with crypto. One, there is a section of the audience. I think that section used to be like 75% way back in 2016-17, but it may be as much as 20-25% today, who are really perpetrating a fraud. That means they know that they are fraudulent. That means they are malintent, right? It used to be much bigger, it is lesser now. So this is one part of the problem. This is why we have all these scams, etc. By the way, I'm not saying the scams are not there elsewhere, but it is, let's forget the fact that in the stock market also there is scam, and then the politics also there is scam. That's not what we're doing. We're not evaluating. So first, there is a fraudulent element. But that is not all. There's lots more problem. Second, if suppose fraud was 25%, right? When it's 25%, I don't mean in value terms, I mean in number of people who are participating. 25% of them are scammy. They may not necessarily be breaking the law, but they're really out there trying to make a fast buck, trying to communicate their way through, try to use influencer marketing, KOL, digital marketing, bots, etc. to try to make a fast buck, as opposed to create value. So that's what I mean scam. Yep. Scam does not necessarily mean something criminal, but malintent. Yep. If that's at 25%, what are we left with? 75. Of this 75, almost all, so I would say 74, now we've reached 99, okay, 25 plus 74, does not really add too much value. It might be in the paradigm of crypto, it might have elements of decentralization or centralization or whatever, but it doesn't do much. As in, it is really riding on a fad. Yep. Right? And the principles of decentralization and open and transparent and on-chain and smart contracts are all really good. I believe in them. But that is down to that last 1%. Yep. Now, we have two choices. Choice number one, we say, if 99% is not valuable, then forget it. Let's go home. The point is that startups used to be that way. Stock used to be that way. So many things, the internet used to be that way. Yep. Like when internet started, when it started in India especially, we were all using text-based browsers. That means all you could see was text, there was no image. The browser we would use was called Lynx, Lynx, if I'm not mistaken. This is 93, 94, 95 kind of thing. Then came TCP IP, which allowed us to watch images and rich media, not even videos yet. That came, at first it was animations, then eventually richer media. The fact is that one of the biggest use cases that came up was pornography, porn. So if you say, hey, that, and if you look at the top search terms, the top 10 would all be like pornographic, right?
Yes.
So if for that you would say, let's close this internet, or let's close social media, or let's close video sharing or picture sharing, then we would literally have nothing. So even if 1% is good, and by the way, while 1% sounds very small, I think with the next bull run, that number would go up to like as high as 50%.
Wow.
As in, that is what I am expecting. I am seeing there are a lot of garbage intent, garbage projects, and unthinking cowboy founders.
Yep, just for the sake of decentralization.
No, just for the sake of fundraising by selling
just
tokens.
For the sake of money.
They're not even thinking of decentralization.
Yep.
They're just saying, you know what, somebody's going to give me $1 million if I sell some token because tokens are good. Hence, giving me money is good. So I get rich. I hope I'm not doing wishful thinking, but I think that time is gone. I hope that those founders have to pay a price for their actions. I hope many of them go to jail. I'm not kidding. Because they took money with malintent, or even if not with malintent, they basically used it to lead a good lifestyle themselves, as opposed to try to generate value for investors. Try. I'm not saying succeed at it. So I think that now, so I've been an advisor to several projects. This thing Reflexical also works with a lot of founders. The breed of founders I am seeing is qualitatively superior. Use cases that are coming up are genuine and solid. So I'm hoping that by the next bull run, that 1% will explode to 50%. And if that sounds too unrealistic, well, it happened with the internet. Suddenly, with the coming of genuine search engines in the late 80s, Yahoo, Alta Vista, InfoSeek, MSN, and also this lesser known one called Google at that point of time, 7 Search, and many of them, I've used all of those search engines. Actually, things became better. So I am very hopeful that we are just a few years away. Few does not mean 5. It probably means like 1 or 2 years away from an explosion of great use cases where people will, just like nobody now says startups are nonsense. Right? I think nobody says the very idea of a startup is nonsense. While startups that are not profit making for prolonged period of time trying to go public, people still call nonsense. But I think that we are just 1 or 2 years away from people stopping to say that crypto is nonsense. NFT is not being nonsense, still going to take a little more time.
Yeah, completely agree. So what I see is that you believe that the next bull run is going to be different from the last ones, and there's going to be a bigger degree of change. What was the last bull run like?
Before that, let me just say that I don't completely agree with you. So I have some guiding principles in life.
Okay.
They are not slogans or expressions that I made. These are things that I picked up. They might be very mundane, but they have been very, very instrumental for me to become what I have become. So you said that I believe that the next one will be better, loosely, right?
Yeah.
Yes, that is true. But actually what I believe is that I will see to it that the next one will be better. I don't see myself as a spectator here. I see myself as a participant.
As a player.
The reason I'm talking to you is to instill this thought. And I'm going to say this to many people. I'm going to work with startups. I'm going to say, listen, is this really Web3 or are you just saying the word Web3? Is a token required or are you creating a token? Is there anything decentralized? Are we using blockchain in a way that is meaningful, or just because blockchain is good and somehow it sells? So I'm out there day in and day out creating this impact. I'm getting other people into my tribe to do that, and viewers, listeners, whatever, you're welcome to be in my tribe for that purpose. And I'm going to see to it. And when there are dozens and hundreds and thousands of people that do what I'm doing, it's going to happen.
That's what our mission is at Coinbase. It's to empower the next generation of crypto savvy. If that the next millions become the crypto savvy, I think the space will grow by itself.
That is what you are doing at Coinbasics. The reason I'm saying that so loud is that it sounds like Coinbase.
Yeah.
And we want to make it different from Coinbase. It's Coinbasics. That is what our friend Dave is doing. That's what I'm doing here today. So completely agreed. But with that, let's say refinement to the thought that no, we are not here forecasting what the future is going to be. We are here creating the future.
100%.
With that, going back to what the bull markets and bear markets are like. So if you look at market cycles in the stock market, and let's say there have been companies that are around for longish periods of time. Every time the bull market comes, it is the same set of stock that rises. There may be a few new entrants, but the previous strong ones rise again, right? Because they were undervalued, or there was not enough liquidity in the market, or what have you, or maybe even consumption had gone down, hence financials were not so pretty. Yep. But then when the market comes back, when the economy comes back, it all rises. I think that is not what we have seen in crypto, and not what we will see in crypto. For example, if you look at the first bull market, it was Bitcoin only.
Yep.
The second bull market was Bitcoin and Ethereum. There are some other coins which nobody even knows of today. If you look at the third bull market, now we are in the 2016-17 part. This was the ICO scam market. Okay, so this was the scam coin era, where anybody realized that an ERC20 token can be created with negligible effort, like it takes minutes. Create a token, create a website, people will give you money, and then you'll give them a token, and what happens after that is not very clear.
Got it.
Right, so this was the scam coin era. While some of the famous names of the next bull market started then or thereabouts, but they were not famous then.
Yep.
Then comes the next market, which is the 2000 and end 2020 and 2021 and beginning 2022 kind of market. So let us just say November 20 to Feb 22 kind of thing. This was the shitcoin market. So there was the Bitcoin market, there was the Bitcoin and Ethereum market, then there was a scam coin market where people were basically running scams. Then came the shitcoin market. Shitcoin was characterized by founders who were often good intent, but really what they were peddling was not very valuable. For example, today, if I come to you, leave crypto and blockchain aside, and I say, hey, I'm a founder, please fund me. And you're like, what are you doing? I'm like, I'm doing e-commerce. You're like, okay, what about it? I said, I'm doing exactly what Amazon does. And you're like, but you're doing
How
exactly
will you be able to compete?
Agree, right? It's the same. But last year, 2021, if somebody were to come and do exactly what Ethereum was doing or exactly what Uniswap was doing, people would fund them. They would not ask them, okay, why are you, how are you different, how are you not commoditized, etc. And obviously those people didn't do well, some did. So I think that this was the next bull market, and the heroes of this bull market, except Bitcoin and Ethereum, which have been carried through, were not the heroes of the previous one. And my feeling is that the next bull market, which may happen in whenever, anybody's guess, I'm saying it could happen as late as Q1 25, as late as that, though the bottom will be hit in 23 is my guess. It could be somewhere in 24. Because see, note, if the market is not falling anymore, it's not a bull market. If the market rises a bit, it's not a bull market. Bull market means I want to hit the previous high and go higher. So Bitcoin has to cross 69,000. So I think that we are far away from that. But having said that, I think that the heroes of this upcoming bull market will be different. So there may be a few, just like, when Ethereum came, it stuck. It was Bitcoin only, then it became Bitcoin plus Ethereum. Then there are so many. There is Solana, there is Cardano, there is Polygon, there is so many others that have become heroes in the last bull market. Some of them may survive, but a lot of them will be, even if they survive, they may not be heroes because they are not fundamentally based on good founders or on sound principles. It is just that it is the one-eyed king in the land of the blind. Now the two-eyed players are coming. Let's see how that goes.
It was about the bull run. What about the bear cycle? Like, what about the bear markets?
Good question. Go back to 2006, 7, 8, when a lot of e-commerce players were taking birth in India. And how were they growing and getting customers? By offering freebies and discounts. Sign up, get a ball pen. Buy something worth 100, get gifts worth 110. Okay, or get a huge discount, or buy one, get one free, etc. Which means they were bleeding money and discounts so as to grow. Right? Most of them died. Even the ones who survived, such as let's say Flipkart, etc., also did that, by the way. So the challenge then was that, okay, you might bleed to acquire money, but are you creating sufficient value that having bled, people would then go and say, you know what, this e-commerce thing is better than the way you would do retail purchases earlier. And as a consequence, I want to hang around, and then you become a successful, valid business like Flipkart, Amazon, or what have you. Another example would be railway ticket booking. You must have heard that people in my generation would stand like at 5 a.m. in the morning, queue up to buy tickets. And then online booking started. And oh man, it was one of the worst online experiences. The front end, the UX of buying tickets was nightmarish. But still, when compared to standing in a queue, like much since better. The time when tickets were available, I have not traveled too much by long distance train, but whenever I've done it, always online, never going to stand in a queue, right? So the point is that when you come up with a value prop, even if you may have to artificially hold it up a little by giving discounts or what have you, are you creating enough value for people to then stick? This was what differentiated from those who acquired customers in e-commerce by just bleeding. And then once they stopped bleeding, customers didn't go to them, versus some others where customer hung around. So this was one very important thing. Same thing is happening in Web3. If you look at how, if you see that all the millions, billions, I don't know, large numbers, right?
Billions in market cap.
How are they being used and spent by the people who are running it? They are in the bleed phase that e-commerce was 15 years ago, right? Nobody can bleed infinitely, because if you bleed, you die. So when they stop bleeding, when they stop buying customers, not customers buying from you, buying customers, buying revenue, buying partnerships, buying all of that, which are all doing, right? I don't blame them because it's like discounts in the early e-commerce era. It is okay if they are now going to create enough value that when they stop buying all of that, they would then have a lot of good customer base or business to go about. But I don't think all of them do. So when they start running out of money and try to convert this to a more economically sound model, which is sustainable, profitable, many are going to die. This is different between what I see as the upcoming bull market, where also people will bleed to acquire customers. They will go to venture capitalists, raise large amount of money and acquire customers at any cost. But like the best companies of the past, if they are then able to somehow spin this to a point where they become economically sound, start generating profits, stop bleeding, I think we have something. And the current heroes have not reached that. In fact, to some extent, I feel that even some of them are perpetrating a fraud. Like, just as an example, right now I pull out a $100 bill from my pocket and give it to you. But the camera is off. Then we turn the camera on. And you say, hey, Ajeet, you're such a great guy to talk to. I'm going to give you $100. And you give that back to me. Which means net I made nothing. In fact, you could give me $50. So keep 50 yourself. And all of these cameras are then seeing that, hey, for being a podcast guest, you actually gave me money. And I go and publicize this. Regrettably, a lot of that is happening.
I see.
And that's, by the way, okay, as long as that is not your entire model, and soon it will evolve into a more solid model.
Which are the industries inside Web3 you see evolving, leading into the next bull run? And which are the more bigger problems that blockchain or Web3 can solve in general?
You asked me of the sectors, use cases, problems. I have answers to that, but I'll actually give you a related answer, which might be something that your viewers or listeners have not really heard of. Because I could talk about, hey, finance is going to get decentralized, and education and trade finance and real world asset, and all of them have elements of truth and compelling logic in them, but I'll change that a little. Instead of trying to come up with the sector of the industry, let us look at the characteristics of Web3. What are the characteristics of Web3? There is decentralization, transparency, smart contract, openness, on-chain, blah, blah, blah. Heard them too often. But there is one, which also we hear a lot, is community.
Exactly.
So community, which by the way, community has existed forever. Right? For example, if I ask that, hey, does Amazon have a community? Does Uber have a community? Does Make My Trip have a community? They all do, but they are not community per se. Right? Even TripAdvisor, while people are leaving feedback, that they're not a community, they're a set of customers. Web3 has managed and created a true sense of community. Right? So I would answer your question a little differently, and this should be exciting. I think instead of focusing on the sector or on the use cases or on the problems, all of which are very valid approaches, but they have been done to death, hence I'm not doing them. Find out those areas, sectors, use cases, problems, which would be better served if a lot of community action came in. Very simple. Social media. Community action would be great.
Crazy.
Shared video. Community action would be great. Certain aspects of travel, not tourism, travel. Community action would be great. We have seen them in things like memberships, like NFTs, etc. So where community is a very big driving force to what you are doing, I think that is where Web3 has the maximum. For example, if you go back like 10, 20, 30, 40, 50 years, what was the one mantra then? It was brand.
Yep.
So where brand would drive things like, Apple or Colgate or Microsoft or what have you, there are so many other brands, it would overcome everything. There was a time, I don't know when was this, probably like 20 years ago, where worms were found in Cadbury chocolates. I don't know if you know this, but there was a huge hue and cry.
Yeah.
Cadbury didn't die. As in, imagine Cadbury should have died the next day. They changed their packaging. They got Amitabh Bachchan to become their spokesperson, who said, I have gone to the factory, I have seen the lab and blah, blah, blah. And Cadbury did okay. That is the power of brand. A unnecessary product, chocolate, non-differentiated from other chocolates in the market, is found with worms in it. And the reason of the worms is inferior packaging, which the company knew of and yet allowed because of better economics, does not die because the brand is so powerful. So as brand used to be, now it's community, right? So those projects, areas, segments where community action will make all the difference is where the biggest use cases are going to come, right? And that is why, oh my God, now I need to be paid, man. But that is why, you know what I'm going to say? That is why I like these guys at Zo World, because I'm at their location in Bangalore in India, and I like it quite a lot. And I don't know why I'm saying this again and again. They are not going to pay me for it. I'm sure my influence, my repeated sponsorship, come on, man, something. All the same, So I think that is a huge motivator. And people who are not buying NFTs because they're thinking it is nonsense and there's nothing underlying it, are undervaluing the community that some people have genuinely managed to create. Pretty much like if, let's say, you were into tattoos. People who are not into tattoos think that's complete nonsense. While, the people who are into the inked club know that they are in some club. I'm not into tattoos, by the way. But at least I can appreciate what is going on there, right? Long answer to your short question, and we kind of need to wind up with another question or so. But it's been great, man. It's been great. You're asking all the right questions and you're encouraging me to give all the right answers, and it's been good.
One question that I personally have in mind, it's how do you see the blockchain and not the blockchain, the crypto space playing out in India, and how do you see it playing right now?
So India is different from some other markets because of the regulatory approach. Otherwise, if you look at the consumer side of it, there are a large proportion of people who are wild speculators in all countries. So India is not different that way. There are people who are building. India is a little better in that than other countries which are not technically or English language qualified. It is the regulatory bit which worries you. On that front, because that is the single largest differentiating factor, I have had a chance, because of my background, to deal with a lot of these regulators who I'm not going to name, but there are very few, right? And I must say this, that my worry is, it is not that they are taking an extremely negative point of view. I'm saying that is not the worry. The worry is bigger. I was at the World Economic Forum, attending events at the sidelines of the World Economic Forum in Davos in Switzerland just a few days ago. And the way the world has evolved, I'm meeting government officials, not just industry people, government officials. I'm meeting people from the municipal corporations and those kind of things, and they are encouraging crypto. They are, the city of Lugano in Switzerland has created its own crypto token called Luga token.
Wow.
Right? So we are looking at huge progress, and India is perfectly poised for it. We have the population, we have the intent, we have young population, we have technically qualified people and others who adapt to technology well. We have global exposure. We have very good infrastructure in terms of mobile devices, internet connectivity and financial infrastructure. We have engineers, we have English speaking crowd. We can and should be the leaders of Web3. But suddenly every few days, weeks, months, somebody comes and says we should ban this, and somebody comes and gives all these stupid statements, and then they don't ban it. See, that's the problem. What should happen is, okay, if you want to say all this, go ban it. And as soon as you ban it, see all the negative outcomes that arise. And then you will feel forced to unban it. You don't ban it, but you keep saying. It's like somebody saying, I'm going to commit suicide, I'm going to commit suicide. And what the hell, man? As in, make up your mind one way or the other. Let's get on with it, man. Let's get on with it. We are missing the bus. We have, by the way, missed the internet bus. We have missed the social media bus. We have missed the e-commerce bus.
Now it's
eventually, we realize we have missed the bus, and then we come back and catch up and do well. Okay, it's not as a polity, we do well. But is it necessary to always miss the bus before then catching the later bus and trying to catch up and sometimes overtake? The answer is no. I exhort the people in the Indian regulatory political space to be open-minded. I'm not saying that, let's demolish the banks, let's break the rupee, let us go wild, let's go degen. No, don't do that. But let's evolve it one step at a time, right? Let's bring in transparency, registration, openness, and say, hey, this can be done, however little that is, and take baby steps forward. I'm okay with that. I'm okay to be measured. I'm okay to even be stringent. But I'm not okay to be paralyzed. You understand what I'm saying, right? That is my hope for India. And a lot of people watching this are not from India and maybe experiencing in their own geographies some version of what I said. So we as the crypto community have to create enough messaging, confidence, community to cause everybody, all our leaders, all our stakeholders, all our members, our friends, our relatives, to at least be open-minded about this and explore this further, and then whatever decision they take is fine.
I won't hold you any longer, but it's been a pleasure having you over. So much value bombs from stock market to crypto market, from like dealing with government officials to building the startups, from like macroeconomics to dealing with people and psychology. It was a, like, I couldn't have hope for a better start. So guys, please go and check out Mr. Ajeet Khurana at Twitter, and thank you. It's been a pleasure.